Well, Kenyan oil marketer KenolKobil has grown its full-year net earnings by 71% on the back of increased sales and higher fuel prices. Standing by from our studio in Nairobi to drill into the numbers is the company's managing director, Jacob Stegman. A very warm welcome to you, Jacob.
Good afternoon.
Well, let's just talk about some of the growth that we saw. 74% jump despite all the challenges that were facing your industry. Do tell us a little bit about what you did. It's been said that a very aggressive marketing campaign and just cutting down on those operation costs in your business. Tell us a little bit about what you did to have this strong set of numbers.
Okay, as you know, challenges are always there, and we realize that over the years with the experience that we have in this industry, challenges are coming usually from players in the market as well as from government-related activities to do with regulations, etc. We have been able to manage it well, it's a fact, and we are presenting today another strong year for the 2011. As you said, it's a very impressive growth in net sales, which is by far more than we were expecting in the beginning of the year. We end up with a 120% increase in net sales, GP about 62% increase. And EBITDA, which is another line which we look at and trying to focus on, has gone up by 76%. So we are quite happy with. The bottom line is close to 70% increase in profit before tax and profit after tax. Our effective tax rate was more or less the same. About 33.5, if I'm not mistaken, percent. So we've been able to manage it. It's thanks to the great team behind KenolKobil, and it's a big team that runs this organization.
A lot of it seemed
yes.
though, a lot of looking at those numbers though, it seemed as though not just your business, but it seemed as though exchange rate volatilities hit East African markets and various businesses, that volatility. And we have seen some news coming out of Kenya that the Treasury now, the government would like the Treasury, the central bank, to weaken the shilling, and not just that, to stabilize the level of the shilling against the dollar. Do you think that this is going to help your business going forward?
Yeah, in 2011, it has been our main challenge. The Forex, handling the Forex, it's a fact that we are handling about 8 local currencies. And of course, with the fluctuating of local currencies, and especially the Kenyan shillings, in which currency we are reporting, which went through such a volatile period, especially in the last quarter of 2011 and in the early part of 2012. Yes, we foresee it as a continuous challenge for us. You could see in our numbers that we suffered a much bigger loss in Forex. If I'm not mistaken, is over 150% increase in that area. Whether we'll be able to manage it better in next year, we want to believe so, because we have set some policies in place, mainly in the area of forward hedging and forward positions. As you know, we have had the policy of at least hedging 50% of our net Forex liability, which worked very well for us during the 2011.
I want to talk.
We believe.
I want to talk a little bit about your footprint on the African continent. You're operating in 9 countries right now, and you plan to expand your operations in those countries. Any plan to move outside of those countries and look for opportunities elsewhere on the continent?
Are you talking about moving to New market? I didn't get that question clear.
Yes, your plans to move
Yes,
to new
of
markets
course.
on the continent.
Yes, we do, and I think what made us successful is our twofold strategy, which is, I mentioned it several times. The first one is the geographical expansion, moving into new markets, and most recently we moved into Congo, Lubumbashi area, where we bought some assets, mainly in the area of storage and distribution. We are eyeing other markets more within our East Coast expansion. If you look at the map, we are looking at markets like Malawi. We want to strengthen our position from trading to more downstream and midstream in Mozambique. We are looking at countries like Botswana, Namibia, markets that we believe will bring us additional, position and growth in sales, which of course will support our strategy of growing in our industry.
One of the things I want to ask you, though, in some of these countries, infrastructure a huge problem. If you look at countries like Zambia, if you look at countries like the DRC, for instance, huge infrastructure problems there. I mean, if you just look at the road between Lubumbashi and Kinshasa, for instance, very difficult to be able to get to those two towns. How are you managing that, particularly when you say that you're putting a lot into the delivery side of your business?
Yeah, we try to deal with each country with its own, condition, with its own, difficulties. And one of them, as you mentioned, DRC. So we are focusing more on the East Coast, the Katanga region. We've been for many years active on the Eastern Congo, bordering mainly with Burundi, Rwanda, Uganda. Now we are shifting and making some direct investment in Lubumbashi, which is still on the east, but on the south, where there is a big mining industry which attracts us because of the huge volume. We believe we can service and generate additional value into our business.